Hello and welcome to the Bald Ambition podcast. I'm your still very bald host, Mookie Spitz, and the one with all the ambition today is Mr. Craig Du Bruyn. He is CEO of Kaleido Life. And as I understand it, he is an entrepreneur operating at the convergence of many of the key topics that we've been sharing on this podcast: technology, health and wellness, even, and taking a fresh, innovative approach to that convergence in a way that's beneficial to particular audiences, in a way that can be characterized as its own unique and compelling brand identity. Welcome aboard, Craig. Tell us a little bit
Thank
about
you,
yourself,
Mookie.
how you got
Wonderful.
here, and what kind of benefits you bring to the world.
Well, I appreciate that's a wonderful introduction. Thank you so much. And it's an honor to get to spend some time with you, just having a chinwag and talking about some of the fun stuff going on in the world right now. I'm from South Africa originally. I now live in Atlanta, Georgia. I grew up in Johannesburg, spent a lot of time in Cape Town, ultimately moved to the East Coast in South Africa to a place called Durban in South Africa because I love the ocean. And then ended up in Atlanta. I met my wife and we decided we wanted to do life together, and it just made more sense for me to move to the US. I'm a serial entrepreneur. When I first started my career, I started at the confluence of analog and digital. I was the first year from our faculty of architecture that graduated on CAD, computer-aided drafting.
Yes, I remember that CAD was a big deal back then, and we're giving away our delicate youth with that statement.
We are.
Yeah.
And I was very, very excited because I'd got headhunted by one of the largest firms of architects in the Southern Hemisphere, and with all the bravado and cockiness one would expect from a early 20-something-year-old, I went in, and in my interview, I actually didn't get the job. And the reason that I didn't get the job is because they worked on drawing boards, not on computers. And they were like, we got one of those things, it's just not what we're looking for right now. And I left very disappointed and went back a couple of days later and said, hey, I got an idea. What about if you give me your most productive architect on the drawing board, what if I transition him from the drawing board to the computer without a loss of productivity? If I do that, will you give me a job? And they were like, yeah, absolutely. And that morphed into me employing a whole bunch of my classmates and starting a consulting agency that went into engineering and architectural firms and transitioned them from analog to digital. So that's where I cut my teeth. Excuse me, I apologize. And always had a love for architecture and had various business interests in all the allied industries that you could imagine in architecture and property development. But through the successes I achieved, I had more and more friends and associates asking me for business advice. And that then morphed into me starting a consulting agency, and would go in and consult companies on how to re-engineer their customer-facing process. Anywhere you touch the customer, how could we use technology to enhance the customer's experience?
What were some of the common pain points that you encountered? Because this transition from analog to digital occurred in multiple verticals. And I love that you brought up the early CADs. Yeah. Because they used to be these suitcase-sized machines costing.
Well, they were almost restroom-sized machines.
Yes, right. And then costing hundreds of thousands of dollars. And the idea of rendering in 3D, it would come across as obvious and intuitive, you would think, for architects, where you've got the three-dimensional reality that we inhabit and that architects work in, and then architects historically have been stuck to the 2D plane with their waxy, inky, the blue ink of the literal blueprints, right? The pulp fiction. And what were some of the obstacles that you encountered? And the reason I bring this up is because really that's at the heart of what we do as consultants, right? Which is understand the pain points And then how did that transition as you're intimating to the subsequent projects and startups that you explored?
Yeah, great question, Mookie. I think hindsight is 2020 vision. I think it's easy for us now to look back retrospectively and go, well, this was obvious, right? But at the time, it it wasn't really obvious. You were at an inflection point where there was a new technology, and the learning curve, which is always, I think, an obstacle to growth, right? I see it in stuff I do every day where somebody's got, okay, there's this new platform for you to go and use. And I look at it and I can see the output, but the input of what I would need to do to learn how to use that, it's almost easier to just do it the old way. And I think that those were the biggest obstacles is, when they looked at how long it took them to actually craft something on a computer screen, learn to use a mouse, have the dexterity of being able to move things and select layers, because it's a really, those old programs were really, really complex. And then you needed a certain amount of, dare I even use the term intelligence, to think in layers, because you would craft these drawings in various layers. You would have the electrical layer and the plumbing layer, and they would all have to sit over one another. And those early systems didn't do a really good job of being able to do that. So it was easier to just do it on the drawing board because you could get it done really quickly.
Yeah, so it sounds like two conflicts. One, technology was clunky. You always have that burden, the onboarding process of learning the software, learning the digital experience. It doesn't start out smooth. The user experience is rusty. And then people don't like disruption. I've been doing it this way. Now you're demanding dozens, maybe even hundreds of hours of my time to train. And I don't even see or visualize the overall benefit of this if we've been fine without it forever. And that's pretty endemic in the human mindset. We're all tribal, habitual creatures.
Yeah. And to your point, I don't know that we resist disruption as much as we resist change, because we don't know that it's disruption at the time, right? It just looks like an obstacle, and it's going to make my life more complex and more complicated. But the flip side of that is, once you can illustrate that it's seamless, that it flows, and that it works, then it becomes an easier transition. But
then it feeds back into the user experience. So there's a reciprocal and positive feedback loop, right? The software gets easier to use because more people are using it. More people are using it, so the software gets better. And it's the same for every paradigm shift, especially in digital. I mean, look at social media, right? You go from the Friendsters and MySpaces to the Facebooks, and then boom. And, and then now we're heading toward your latest offering, which I'm compelled to hear about as well.
Yeah. Well, thank you. That story, if you're open to it, I'll share a brief origin story with you. I had a business partner, and in one of the entities, one of the industries that I was working in, was the development of residential golf estates. And we had an incredible business partnership. They say a good business partnership is like a wedding. I like a marriage. It's really great if it works well. And we had a really good business partnership. And I was in Seattle, Washington on business. He was in South Africa. He was younger than me in his mid to early 30s. And I woke up to a text message one Monday morning. There's a 9-hour time difference between Seattle and South Africa's 9 hours ahead. And I woke up to a text message, Mookie, that just shook my world. My partner had passed away that weekend. And we had a business meeting on Friday, and all was fine. And Monday he was gone. And so something like that will, really, really shake the foundations of everything. I'd had many people pass in my life before. It wasn't that I'd never experienced death. It was that it was the first time somebody so close to me had passed without any forewarning. They were just gone. And returned to South Africa and handed his widow a check from the life insurance company, and she just said, I could have used this money when he was alive. The kids have never been on a real holiday. We've been so busy. He's been so busy making a living that it's almost like we didn't get to make a life, like it was always the next thing to be done. And I left. That just kept reverberating through my head for the next 3 weeks. I had time on my hands. As a serial entrepreneur, I like challenging big, bold, audacious problems. And I knew nothing about life insurance. I had it. I paid for it, but I didn't really understand how it worked. And so just purely out of curiosity, I started digging into, how does life insurance work? What are mortality tables? How do they calculate mortality? What data goes into them assessing the viability of, because this is really controversial to even discuss or allude to, but the more I dug into it, it just looked like a really sophisticated Ponzi scheme. Like, you have to have a certain amount being paid in, and then a certain amount being pulled out, and the inflow needs to be more than what the outgo is, right? And you got to be feeding that flywheel. And it just seemed to me like, well, why is this not a Ponzi scheme? How is it different? And the more I dug into it, I realized, well, it isn't. There are sophisticated financial engineering that goes into ensuring that doesn't happen. And I identified that the life insurance industry hasn't changed for over 150 years. And I'm not talking about digital, which we can get into. I'm not talking about digital enhancements or technological improvements where it makes it easier for you to get a policy online or faster or anything along those lines.
But the essence of amortization and how everything is calculated, right?
Yeah, that hasn't changed. You take out a policy, you pay it for life, and there's benefits at death. That mechanism, there might have been a few variations on that, like what they call an advanced death benefit rider, which is if you have a chronic illness or something, it's confirmed that you're not going to live longer than another 2 years, they'll give you access to some of your death benefit to cover some of your medical expenses. But the mechanism hasn't changed. Take out a policy, pay it for life, benefits at death. And we just looked at that and thought, well, is there a better way to re-engineer that? And then when you get into it, you realize that you've got these behemoth organizations, these life insurance industries, which are absolute behemoth corporations. You go into any major city anywhere in the world and look for a glass facade building, chances are that it's a life insurance company, right? And these life insurance companies, this is not some socialist decree. I'm not standing on my soapbox in Union Square in San Francisco going, they're evil. They're not. It's pure capitalism at work. It shows you how well a system can work when it's engineered correctly. And they're a perfect example of a financial system that's engineered correctly. But you've got these behemoths of organizations that sit on trillions of dollars of underutilized wealth, meaning they own properties, they own stocks and bonds. They've got these huge investment portfolios. Just in North America alone, it's over $10 trillion. And their constituents are living day to day, paying their premiums. And I just looked at that saying, is there a better way for us to redistribute some of that underutilized wealth and make it available to people while they're still alive? And so the idea behind Kaleido Life was born, which is, can we give people access to some of their death benefits while they're still alive for them to use it on the things that are important to them? And we coined the phrase where you get to inherit from your future self. And,
I love that branding. And to your earlier point about not only disruption, but change. I found that even if you offer someone a tacit benefit and make that clear, the initial emotional resistance is striking. And even if you, especially if you have a good idea, it's innovative, it's groundbreaking, even if intuitively obvious and overtly valuable, people tend to have a whiplash effect when they hear that, which is, that's not life insurance. That
Yeah,
doesn't make any
or that's
sense.
too good to be true,
It's too good to
right?
be true. Where I'm paying you my premium, I just sent in, to your point, electronically, $1,100
Yeah,
for my annual premium. I'm still kicking. I'm still here. So how could I possibly get anything back? I mean, back from what?
yeah. So let's use this example where a John Doe enters our ecosystem and we build a 360-degree wellness matrix on them. We take into consideration some behavioral modeling, um, some financial inputs. We look at biometrics, and we use an AI data aggregation layer to build what we call a life liquidity score. And their life liquidity score tells us how much of their death benefit they can access upfront. So if you meet our underwriting and onboarding requirements,
I love that,
and
the death benefit.
yeah,
Your lexicon here from a marketing point of view is great.
absolutely.
Yeah.
And one of the things we position ourselves at is that life insurance is not life insurance. It should be called death insurance because there's no life about it. You'll
The
only
way
ever
it is
see
now, traditionally.
right, right.
Yeah.
And so we're all about bringing life to insurance, And so if you meet the underwriting requirements, we'll give you access to up to 25% of your death benefits on the day you take out a life insurance policy before you've even paid us a premium. And how we're able to do that at a very, very high level is if you have life insurance, as morbid as this may seem, if you have life insurance, you're worth more dead than what you are alive. So we go to that point in the future where we use technology to calculate mortality. We go to that point in the future where we know you are worth more dead than what you are alive. And we collateralize a percentage of that future value and we bring it to the present point and we make it available in present value. So you're accessing and inheriting from your future self.
Now, there's provisos to this, and not to raise objections, but
Please
just
go
my
ahead.
listeners will be asking questions, and
Sure,
it's my role to be a conduit to some of their excitement, but also some of their skepticism.
sure.
So, number one is there's a lot of personal information which is being shared here and analyzed here. Now, the little that I do know about death insurance as it exists right now, they're already privy to a mountain of information about me, which is how
Mhm.
my policy was initially established. And to your point, this is how these gargantuan organizations remain profoundly profitable, right? They're making a lot of money based on what? Based on data, based on statistical analysis in aggregate that they then apply to everybody.
Mhm.
So, how is your setup similar and different from the traditional model? And will I be violating or at least extending more or less information to you to enable any of this to happen?
I think that that's a great question, and I think that my position on that would be you get to share whatever data you feel is comfortable that is within your comfort level. We get to determine whether you're sharing enough data for us to be able to make a decision to be able to help you, and hopefully we can meet somewhere in the middle, right? Um, and so the more information we have access to, for example, if we can have access to your health data, it's obviously secured, it's within the right regulatory protocols, and all the right protection mechanisms are set up to ensure that there is still privacy with that. And we use those inputs to determine what your health metrics look like. So what do you look like from a health perspective? We track you in certain key areas, and then what uh, based on psychometrics and behavioral modeling, we determine what your risk appetite is. So, for example, if you have a really high risk profile from a health perspective, you're a smoker, you're finishing a bottle of whiskey every single day, and
I'm a wingsuit base jumper and a hang glider.
right, and
Right.
you finish a bottle of whiskey
And I
every
drink
day.
half a bottle of scotch, a pack of cigarettes, then that profile is going to be a little bit different
Correct.
than if
Correct.
I'm a marathon runner
Yeah.
and I've got equity.
Correct.
Yeah.
And so our view on that, Mookie, is give us enough information for us to be able to take the risk on you and give you access to some of your future death benefits. We don't look at it from a myopic, one-dimensional view of just what is your credit score. And the reason for that is your credit score is just a snapshot of where you are today. It's not a reflection of where you've been. Well, to a certain extent, yes, but it's certainly not a reflection of where you're going. If you take a 25-year-old or a 30-year-old, their credit score might not be great, but they may be a really high net worth individual at some point in the future. Credit score is just a snapshot of where they're at now. So we look at a way more multifaceted approach to calculating your life liquidity score.
Yeah, there was an expression that was tossed around about a decade ago, and it was called digital exhaust. And what that means is, from a biometric point of view, we have 37 trillion cells in the average human body. That's an awful lot of data. How much of it are we actually accessing in terms of understanding the quantified self? Hardly any. Same goes for the full 360 of what constitutes a person from an individual landscape. So you've got credit score as an aggregate estimation of their viability, right, and their responsibility. But you also have lifestyle considerations, as you mentioned, health considerations. So if I'm hearing you correctly, you gather as much information as you can.
Yep.
And then you do the AI. you do the AI dance on that data.
Yeah. Well, so the only other thing that I would talk about that we add to that is we use psychometric and behavioral modeling. So right now, academia, science, and now amplified by technology. So for example, from 11 questions, I can unlock 3,000 data bits of information on you to build a profile on how you view life in general, what your biases are, what your risk appetite is. Are you somebody that has a really high risk appetite? Do you think it's okay to live with your credit cards maxed out? And these 11 questions are very, very generic and broad, but using technology, when you add all those layers together, it gives us an opportunity to build this 360-degree wellness matrix.
Yeah. And now, again, I'm projecting some of my listeners with my bald head here. How is this different than a super sophisticated loan?
Great question. So I want to take one step back before I do, just to wrap on your question of the data, right? A key difference is we give you access to all the data we use to build the 360. There's no smoke and mirrors. So it's not something that we use and you don't get to see. We give you full access.
The black box is ubiquitous and it's annoying.
Right. Right. So you get to see what the inputs are.
Okay, so I see my profile dynamic.
You get to participate with us and go, I don't completely agree with that toggle. Like somehow that was misreported. I'm not drinking 3 bottles of wine a week. I'm just using
right. I wingsuit base jump only once a week.
Once. I've only done it once in my life, and I misunderstood the question.
Right.
So, and then your next question was, sorry, I Mookie, I lost
How's
track
it
of
different
your
from a loan? Because
great question.
again, the
So,
analog here is you guys are going to front me some money that you're going to get from me over the long term so I could live my life better instead of my relatives, maybe my friends, getting a chunk of change when I'm 6 feet under and can't appreciate any of it except for maybe posthumously their capitalization on my hard work.
right. Or also viewed from the perspective of you have a family and now your family's taken care of, your kids'
Of
education is
course,
taken care of, your
right.
house is paid off, and
Same
your
rules
wife doesn't
apply to
have to.
them. My sons are so entitled. I'm sitting here where it was hard enough to work and support them for 20 years. Now I continue to pay my premiums so that when I drop dead, these spoiled, entitled kids can get a chunk of change that, to your point, I don't have any access to. I've been paying in for decades.
Uh huh.
I
Uh
don't
huh.
see any of it. And then my spoiled, rotten kids are just going to cash out.
Right, and the quality of their eulogy at the funeral will be directly proportional to the amount of equity that was left behind.
100%. Right. We miss dad.
Yeah,
Yes, they
yeah,
laugh all the way to the bank.
yeah. So how's it different to a loan? It's not a loan. There's no loan, there's zero interest, and there's no repayment. How are we able to do that? So I want you to just think in terms of this at the moment. John Doe comes into our ecosystem, takes out a $100,000 life insurance policy. Heaven forbid, next week Monday, John Doe gets hit by a bus. Okay, his wife was the beneficiary on that policy. What happens at that point? At that point, his wife gets paid out the $100,000. Okay, that comes off balance sheet from us, and we pay her out. That's the risk we undertook to carry. Okay, so at that scenario, let's go to a point in the future where excluding a catastrophic event like your wingsuit failing or you getting hit by a bus, there's a point in the future where we're able to predict your mortality, right? And that's typically within a 12 to 24 month framework. And we'll go, Mookie, right now, based on the data we have and based on the best scientific guesses, we estimate you're going to live to 87.9 years.
I'll take it. I like that. I'll take it.
Give or take 12 months either way.
That's
right?
impressive if you can get it down to a year.
Yeah.
Yeah.
So what we're able to do is we go to that point where there's a $100,000 death benefit that's going to be paid out. A lot of the life insurance companies around today, a lot of their margin is calculated on the fact that you're taking out something that you hope to never use. Right? You're paying for something that you hope you never get, which is the death benefit. And so a lot of their modeling is based on the fact that a large percentage of their demographic is going to take out something, pay it for 10, 20, 30, 40, 50 years, and never use it, cancel it before it becomes payable. Well, that's not our view. Our view is if you've taken something, we intend to deliver on that, and you're going to get paid. And so we take a percentage of that future value and we make it available to you now. So you'll either have less of a death benefit at that point in the future. So if it's 100,000, you're only going to get 75,000, or you can elect just through a toggle on the box when you take it out. Hey, I want 100,000. Add whatever the advance is to that, and I'll still keep my $100,000 death benefit. So it's not a loan, there's zero interest, and you don't repay it. We're secured in the fact that we're taking it from the death benefit. If you were going to die in a week's time by being hit by a bus, we're just giving you a percentage of that now in anticipation of having to pay it at some point.
So it sounds like the best of both worlds in the sense that John Doe, or in this case, Mookie Spitz, One
Mm-hmm.
guy has hair and the other guy does not. I'll let you use your imagination as to which one is which. And they have the coverage. So if they drop dead tomorrow, then their family is taken care of. That's the whole point of death insurance. You're
Correct.
offering the additional benefit of the option of getting some of that money now, and the price paid for it, as it were, is less paid out to my entitled bratty children at my
Mm-hmm.
funeral, and I get to live it up a little bit, and they're
Mm-hmm.
entitled and bratty anyway. They'll be fine.
Correct.
Yeah.
Correct. So,
Yeah.
in essence, yes.
Yeah. And I'm being facetious, of
I
course,
know. I understand.
just a little bit partly, but everyone feels this way, which is at the heart of your business model, which is I'm paying in for something that I get zero benefit from, except for the peace of mind that when I'm gone, the people I love will be taken care of. And what
Correct.
you're doing is you're enabling that peace of mind to stay in place, but at the same time offering some benefit to the payer to get a little bit of benefit up front without significantly compromising that layer of security, that peace of mind.
100% correct. And
And you're
you're
able to do this, if I'm listening correctly and summarizing it correctly, by using advanced analytics tools to create a 360 profile, not only financially and physically, but in terms of behavior, in terms of attitude, which constitutes, in a sense, a benefit to risk profile for you and your business. So you get
correct.
a good understanding as to the probability of my capacity to fulfill my end of the deal, as it will, that I will be
Correct.
able to meet my premiums throughout, which would facilitate and encourage you, in a sense, fronting that money to me with the assurance that down the line, you retain profitability and I get all the benefits that you described.
Very, very good summary. Well done.
Okay.
The only thing that I would add to that is now let's play devil's advocate for your listeners and go, okay, what happens if I don't have the minimum life liquidity score that you require to give me a cash advance? What happens then? So am I just bumped out? And how do you determine who does and who doesn't? And would you be open to me answering that question? So when we build that 360 wellness matrix and we create the life liquidity score, you're either going to qualify for anything from 0% upfront to a maximum of 25% upfront of your death benefit. Okay? What happens if your life liquidity score is not high enough for you to qualify for 25%, but you only qualify for 10%? Or you only qualify for 3%, or you qualify for 0%. Well, what we'll do at that point is, remember I said there is no smoke and mirrors. We give you access to that underwriting data. We have a gamification and rewards engine that gives you access to that data, and will show you, Mookie, John Doe, if you go and make these improvements to your behaviors, to your physical wellness, start doing 10,000 steps a day, and we'll give you a micro reward like a Starbucks coffee or whatever the case may be. We'll actually give you a roadmap that shows you how you can improve some of those data points on your life liquidity score to improve your life liquidity score so that you can access liquidity from your death benefit at some point in the future.
See,
So
that's
it's a very,
brilliant, I think. So you are gamifying and, in a
yes, sir.
sense, modeling ideal behavior, because what's good for the goose is good for the gander here. If I'm
Correct.
healthy, I'm living a life, if not free of risk, then reduced in risk as a consequence of my exercise, my diet, my fiscal responsibility, and my general attitude toward things. If I
Mm-hmm.
can tweak my own metrics, I not only make myself available to some of the money up front as a life benefit, but I'm benefiting my own life by living healthier and better, and everyone wins.
Correct. And then what we're able to do is it's not a static once-off occurrence that you can access liquidity as a one-time event. As you continue to improve those markers, those data points over time, we know if you're a 30-year-old, your financial wellness, your net worth is also going to increase, which means your need for life insurance will increase. Your family's going to need more life insurance coverage to maintain the lifestyle they were used to if you're no longer there. And so as you increase those data points, we're going to give you access to more liquidity as time goes on. Our goal is to become a financial partner with you in all the major financial milestones throughout the course of your life. So
See,
it's not just a once-off
that's a
event.
very interesting and compelling aspect of your value proposition and your model. Because historically, as you described, the traditional death insurance model is pay your premium, drop dead, and then your family benefits. And you're turning it on its head in the sense that if you're really looking at it as true life insurance, it's not just about the payout. It's about a holistic approach to your health and wellness through positive reinforcement across all aspects of your life and a continuous partnership so that you're, in a sense, a financial and personal health and wellness advisor.
Correct.
In
And if you look at,
principle, that's what it sounds like to me.
correct, very good summary. And okay, if you look at the life insurance industry right now, and I really want to double down on this point, is nobody's saying they're these evil macro villains of the world. They're not. There's a lot of good provided through the peace of mind and families that have financial stability if a loved one gets taken away. And I want to double down on that.
Yeah.
However, you still have some of these things where you look at and go, it's archaic. It's a 150-year-old industry and the mechanism hasn't changed. And right now, the life insurance industry only ever has 2 points of contact with their customer: the day you take out a policy and the day you die. And there's nothing in between except if you stop paying.
That was my exact point, which
Right.
is sign on the dotted line, pay your premiums, and then your family gets to applaud you from the sidelines when you check out. That's basically it. And what you're realizing is all of these great things where you're killing all these birds, so to speak, but in a very healthy and holistic way, which is a healthy person lives longer and better, which simultaneously enables you as the life insurance provider to double down on your promise of being able to add value while they're living, not only when they're dead.
Correct.
Yeah, that's fascinating. So I get I'm channeling my listeners a little bit. You're shaking up a traditional model, and to your double and triple, and I'll quadruple the point, we're not calling the insurance industry baby and at this point old man or old woman ugly. We're merely saying that the system hasn't changed in 100 years. And now we have new tools and technology which facilitates and encourages a better understanding of our customers, which enables this holistic, proactive approach to insurance. So my next question is, again, like feeling the listener vibe, is it's disruptive in that sense, and the insurance industry is regulated. So to what extent do you go outside of the norm, and what assurances do your customers have that their money is secure, that if they keep their promise to you, you keep their promise to them, especially since we're talking about now, but also years and decades into the future?
Great question. The short answer is it's part of it being a 150-year-old plus industry means that it has 150 years of bureaucracy, red tape, and regulation, right? Specifically designed to ensure that the consumer's interests are taken care of. And we have to be licensed, and the licensing is a very strict and onerous process, and we're busy navigating getting the licensing in place. We're pre-launch, we probably should have qualified this beforehand. We're pre-launch. Our intention is to go to market end of Q1 2026, beginning of Q2 2026. So we'll go live then. In the interim, we're busy navigating getting our licensing in place. And
All right.
You get your license, and the regulator says you meet all the requirements necessary for you to be registered as a life insurance company in North America.
Yeah, no, that's great. And I appreciate that transparency, as many of our listeners do, because I'm sure they're like, wait, how can I get a piece of this? And your answer is it's in the works.
Mm-hmm.
But even this discussion I find compelling and very worthwhile in terms of the untapped potential of an industry as traditional and archaic, frankly, as life insurance. And you're bringing in a novel, innovative, and really, really scintillating kind of idea where you're unifying this old school approach to a state industry with some of the tools and tech. Because the one word that comes out of this to me is personalization. The insurance process right now is deeply, deeply statistical, impersonal, and removed from my everyday well-being and life. And you're integrating all these facets in a way that's dynamic, personal, and I think compelling.
Yeah. Mookie, in fact, that's what we call our data aggregation layer. Is it's hyper-personalized, user-driven product creation. That's what we refer to it as.
Yeah. I love that. And then based on your model, if we could project forward, you're making a lot of promises to John Doe with hair and Mookie Spitz without it, that if I agree to join you in this journey, and then I have the potential to get maybe 25% of the death benefit while I'm still alive, what do I need to promise you based on this model? Because as you mentioned before, the insurance companies count a lot on people just, you know what, I've been paying in 10, 15 years. My kids have almost grown up. You know, I'm going to take that $1,100, $1,200, $1,500 that I'm paying in right now and just spend it on me. Why? Because I'm not getting a life benefit. I'm getting a death benefit. So you're giving me a life benefit. What promise do I have to make to you to enable this kind of setup?
That's a great question. And the promise is made at point of origin. And by point of origin, I mean the 80% of the promise is the individual, the habits, the health and wellness you bring to the relationship at the point of origin when we start the relationship. And if you don't meet the minimum bar that we've identified in order to give you a cash advance, that you're undertaking to make the improvements necessary, and we'll in turn give you access to more liquidity in the future. And then it's that you stay engaged, but that is on us. We take that responsibility for the relationship. We have to continue to add value to you as our customer, that we make you an indispensable financial resource in your life. And that onus of responsibility, that burden of responsibility is on us as Kaleido Life to ensure that we create a compelling value proposition for multiple reasons. Number one, that makes you proud to continue to want to be a customer. And number two, which is the most important part of the relationship, if we fulfill our promise, continue to add value to your life, continue to give you a value proposition that is that compelling that you cannot ignore it, you become a product evangelist for us. And that's organic. That's not because we're going, we demand of you that. No, if we do what we do right, you're going to, guess what the yoga mom who used her life insurance to pay for her IVF that she couldn't afford, but she was able to do it because we gave her the money through her life insurance.
Yeah,
Guess what she's telling
I
her?
see testimonials and, campaign. I'm a
Correct.
marketing and PR guy, and you've got a lot of juice here.
Right. And
Yeah.
our goal is, here's an interesting stat for you as a marketing guru, is the NPS in the life insurance space right now is less than 20%. NPS, for your listeners who don't know, is your net promoter score that tells the world who is talking about you online. To have a net promoter score of less than 20% tells us nobody's talking about life insurance online. Our goal is to have a net promoter score of over 85%.
Well, life insurance, again, not to call the baby ugly or the industry compromised in any way, but life insurance is the butt of every old school classic stand-up comics joke. And then the life insurance salesman is a caricature of the American career choice, if you will, right? I'm going to go sell life insurance. I got my Uncle Bob. He sells life insurance. And you're changing that at its core. So I love your overall approach. In principle, it's innovative and beautiful and potentially transformative. And I think it's very, very cool. And in that spirit, now that you're in this kind of beta phase, you're putting everything together, you're going through the onerous bureaucracy, as is obvious and you admit, in terms of getting accredited and certified and being able to do what you want to do. How can people participate or help? Are you doing further studies? Are you playing around with the analytics tools? There needs to be a user interface and a user experience as far as the digital engagement goes for the profile itself. And so what's cooking now between now and when you go live? How could people participate, or what are you looking for in terms of building awareness at this moment for your company and this interesting idea?
Appreciate that question so much, Mookie. Thank you. The first would be to go to kaleido-life.com.
Yeah, and we'll put the links in the
We can share
description.
that
Right.
here. And it's a very basic, you're gonna just share your name and email address, and you're gonna say, hey, keep me informed. I want to be added to whatever communications there are about what you're doing and when it's happening, and we have regular communications around that. Following us on the usual social media platforms, and just checking in on those platforms every now and then if it doesn't pop up on your algorithm, to just see what we got going on. And I'm through those sites, there's an opportunity for you to reach out to our team if you feel that there is a way that you either want to communicate with us around something where you have a value to add, if you feel that you'd like to participate in some way or another. There's all those opportunities for people to participate and share their thoughts and ask questions and all that type of stuff.
Great. And as far as the random venture capitalist goes, the angel investor who on his feed happens to be listening to your humble, bald host here, talking to you, I'm assuming seed capital investment.
We would always engage in any conversation. We're looking for, I think it's important, this could be controversial, but money is not hard to find when you've got the right fundamentals in place. And so more than just money, I think we're looking for capital and mission aligned partners who are like, we see what you're building. We think we could add value through a strategic introduction here or a strategic partnership there. But we're always open to a discussion. One of the things I advocate for, part of the reason why I'm having this conversation, for which I'm very grateful, and part of something that I tell my team all the time, we take meetings, certainly now for where we're at in our life cycle, we take meetings for what we can learn, not for what we can earn. And that's the purpose of every engagement, is what can we learn? And then I extend the same thing back to you. How can we help you? How can we help your listenership? What is there a way we can add value to your platforms and what you're doing and what they're doing?
Well, you're already doing that now, because my focus again is on brand identity, consultative selling, and the convergence of technology with entrepreneurship. I have a very strong health and wellness background. Most of my work in marketing and PR has been in health and life sciences. So this is a nice, with the Venn diagram all comes together in a nice way.
Mm-hmm.
And from an investor point of view, it sounds to me like an ideal partner with you would be someone with sensitivities and experience and interest in that similar kind of convergence, where artificial intelligence, analytics, biometrics, behavioral science comes together with finance in a very, very interesting way that cuts a swath along the lines of what you're proposing. So
Yeah,
I think this is,
absolutely.
you emigrated from South Africa, as you mentioned. And, our country here, America, we're going through changes and we're trying to figure it out here. But at the heart of America, in my opinion, is opportunity, is entrepreneurship, is possibility. And we have kind of our own multiverse here of these kind of opportunities. There's no accident that we birthed the internet, AI, and financial structures, some of them a little bit old, but ever since really World War I, when finance moved from London to New York and Wall Street, we financed the big war. We helped Europe out. And that is America. And that's why I
Mm-hmm.
think we should stay hopeful about entrepreneurs like yourself who are filling us with ideas. You're an emigre, and you're living the American dream by being even more American than most of us. And I hope I'm
True
not
story.
speaking out of turn, but I think that this is a
I
wonderful
couldn't agree more.
characterization.
I couldn't agree more. Absolutely. Yeah.
Yeah. So thank you so much for
Thank you,
joining
Mookie.
us. And
And
I found
I
this.
want to mention one other thing is you have um, the you're in a very unique position in that you're one of the first 10 podcasts to have hosted an introduction to Kaleido Life that when we achieve unicorn status, you get to come back and go, I was there at the beginning.
Yeah, and I would
So
love to have you back.
I would
Once
love
you
that.
when you hit the ground running, it would be great to follow
Yeah,
up
let's do that. Let's
and
do
see
that.
that, because you're all about continuity, right? It's not just about
Absolutely.
signing on the dotted line and paying the principal, but we're with you every step of the way.
Yeah.
Would be love to touch base with you as things evolve for you. And I hope I set a good benchmark for podcast hosts.
You set a very,
I
very high
think you
benchmark.
expect nothing less than someone who asks you some good questions.
You asked phenomenal questions. Well done. I really
And with
enjoyed the
humor.
conversation.
We gotta keep it fun, because otherwise,
Absolutely.
if you don't have fun, then what's really the point, right?
Absolutely. Well,
Thanks
I'm
so
very
much. I
grateful.
really
Thank
appreciate
you.
your time. We've got links
Mm-hmm.
below for all resources and information. And I'm assuming people can even contact you, whether they're just
Absolutely.
someone who's curious about your model, or whether you're that angel investor with the
Yep.
sweet spot of AI and fintech and the like.
Yep. Appreciate
Thanks so
that. Thank you
much.
so
Like,
much, Mookie.
comment, share, and hopefully we'll be back at you and we'll catch up to see how things are going. Thank you.
Thank you so much.
Thank you very much.
Bye.